The Big Short. If you've not seen the movie, I highly recommend you guys taking a look at it. Basically, it's a movie based on a true story about a gentleman named Dave Burt, who essentially shorted the subprime market for mortgages back in the last real estate recession. He's going to do it again. And let me just jump into the article for you guys. Former subprime player claims he now short the mortgage market for climate and Cerveza sickness risks. Now, this is a very interesting article, so I'm going to kind of just go through it paragraph by paragraph with you guys to really get a good insight as to what the future holds with the real estate market. During the mortgage bubble in the early 2000s, when investors were feverishly trading faulty subprime bonds, a few savage skeptics recognized the bonds were doomed, so they bet against them. They shorted the bonds and made billions of dollars. Now, one of the players is doing the same thing, but not on subprime. He's doing it based on the risk to the housing market from climate change and the Cerveza Sickness pandemic. Dave Burt is a financial analyst who looks at risks in real estate derivative markets. That's what he was doing back in 2005, analyzing vast pools of subprime mortgage bonds that Wall Street was creating and selling. He examined the homes and borrowers who owned them. Burt had made the most sensational information and models to analyze the information, Lewis wrote. He could tell you, for example, what would happen to the mortgage loan zip code by zip code in various house price scenarios. I mean, talk about an analytical guy right here. Now, the mortgage short is a little bit different based on what he is examining. He's claiming that because of natural disasters, insurance premiums are going to rise, which for any unforeseen borrowers of mortgages, their price to live essentially is going to increase, and they're not going to be able to afford the houses that they live in. Prime example here in Florida, you know, we have hurricanes, and when a hurricane comes through and devastates certain areas, it's inevitable that insurance premiums are going to rise. Now, certain people that are kind of paycheck to paycheck, if their insurances, let's say they, you know, go up by 50% or even 100%, and they're paycheck to paycheck and they're not able to afford that, the first thing that they're going to have to do, most likely, is to downsize their property. Now, when their cost of living rises up, and they're not able to afford that, they're going to let certain things go, and one of them in most cases could be their mortgage. So that is what he's essentially shorting, is the mortgage market, and anticipating natural disasters to bring up premiums where people are no longer going to be able to afford their mortgages, and it could bring in a whole swell of short sales as well as foreclosures. So this is something that I think we all need to take a look at. Burt says as the risk of floods, fires, and wind increases, the cost of owning a home will go up. Costs from higher insurance rates, higher taxes, and uninsured losses. As the cost goes up, the value of the home goes down, and consequently the mortgage on the home is at higher risk of default. It's just like during the subprime storm when the borrowers really couldn't afford homes that they were being offered loans on. They're cheap up front and then turn expensive very quickly. And back then there was a lot of adjustable mortgage back then. So if they own the property for 3 years, it could be a 3-year balloon, and they might have been paying 5% interest. And then that 3-year hits, they got to either refinance or that mortgage adjusted. So it could have gone from 5% to 9%. It was just a messy situation. He's looking at specific areas where home values are likely to fall from climate impacts, causing homeowners to walk away from their mortgages. In order to profit off of that information, he's going to short a specific type of mortgage bond. These bonds are issued by Fannie Mae and Freddie Mac to essentially protect them against the first X number of losses, he explains. And unfortunately, I think a lot of these borrowers that bought into these loans got in with very low money down, so they really didn't have a big stake in the game. And, you know, I personally know people that have gotten mortgages where, you know, they are paycheck to paycheck. They didn't necessarily have a whole lot of money down, so it doesn't take much of a hiccup to go wrong in people's personal financial situations that could lead them into a default situation, unfortunately. Burt thinks those bonds are overvalued because of his calculations. Close to a third of U.S. homeowners are vulnerable to big losses in the value of their homes from climate change. Interesting. Burt says he'll take half the profits generated by his investments and put them into nonprofit that in turn will invest into clean energy technology, carbon capture technology, and social response efforts to the effects of climate change. More importantly, he claims he is educating the financial market about climate risk, even as he takes the risk himself. He goes on to say the biggest risk to this approach is timing. How long can I pay for those shorts before this theme gets realized? And if you watch the movie The Big Short, it was pretty cool where you had a lot of investors really freaking out that he was you know, buying so many shorts against the subprime market. And unfortunately, if you do that, you have a monthly nut that you're gonna have to pay every single month to get this short position. And a lot of investors got very nervous in the movie and wanted to pull out and everything else. In the end, he knew what he was doing, but he was up against the clock because a lot of money was going out. However, as you heard, he realized billions in profit on that short position. Now it goes on to say, now Burt is adding the Cerveza Sickness pandemic to the mix because he believes climate and the Cerveza Sickness together make the bet even bigger. The Cerveza Sickness has created a lot of problems fundamentally for the systems that support the housing market and are potentially contributing to the mispricing of these climate risks and asset values, namely that insurance premiums are too low, said Burt. About 3 million mortgages are now in government or private sector Cerveza Sickness bailout programs, and there's no guarantee that those borrowers will ever get current on their loans again, so the homes are at risk of foreclosure. Unfortunately, we're in a situation right now where there has been an increase in people applying for the forbearance as well. And you know, a lot of the forbearances are going to expire March 2021. So we will see at that point in time how many people are going to be able to get current. But I think it is a inevitable storm that we are going to see foreclosures and short sales hit the market. And if you guys are a real estate agent, I'm telling you right now, you need to learn how to list foreclosures and short sales and even do BPOs. I do have courses in the description below for you guys, so you guys be prepared. The last real estate recession, we went into four categories for pivoting when the market crashed, and they were short sales, foreclosures, BPOs, as well as rental property management. So be prepared for this because I think the writing is on the wall. This guy is a smart guy, and I think that he understands what the future holds for the real estate market. I'm going to leave you guys a link in the description below for this article as well, so you guys can check it out. And if you guys got any value out of this, I appreciate a big thumbs up, and I'll see you guys on the next video. Thanks a lot for watching.